Good to see you there, Scotty. We're here in Las Vegas at the Exchange ETF conference. This is the largest gathering of ETF professionals. It's about 2,000 asset managers like BlackRock and Vanguard with investment advisors that buy the ETFs. They're all here to discuss the latest investing trends. Let's talk to one of those industry leaders. Paglia is Executive Vice President and Chief Business Officer for State Street Global Advisors. She runs the SPDR business. Includes the largest ETF in the world, SPDR S&P 500 ETF. Anna, good to see you. Give us an overview here. What are the 2 or 3 main themes that's on everybody's mind here?
Sure. So if you follow the flows, you will see the trends and what investors are really worried about. The first one that I would mention is confidence in the U.S. economy. We have seen that 90% of the assets in the industry to date are U.S.-based. So investors still believe in the U.S. industry. And the other thing is volatility. We have seen very good flows in commodities and gold because these are the products that are helpful for investors to hedge against the volatility risks.
So getting access to private credit is hot. We talked about this a little while ago. You recently launched the SSGA Apollo Public and Private Credit ETF. Investors are interested in this fund because they want the private credit exposure. And investors sort of anticipated that this fund, PRIV is the symbol, would hold between 10 and 35% private equity. But one analyst found that it actually only holds about 5% private credit that's in that fund. Can you tell us how much private credit is in the fund right now? What's the limit that you're working under? And do you expect to increase that amount at all?
Right. So that's a really good question, Bob. The limit is as advertised, between 5 and 35%. To date, the exposure to private credit is in the range of 19%, between 19 and 20%. And we expect to change that exposure based on our view about the overall portfolio.
So I know the private analysis was 5%. You're saying now there's 19 to 20%
That's right.
private credit in the fund
correct.
right now, and you expect to increase that?
Well, it's up to the portfolio managers. They are going to have to look at the overall performance of the portfolio, but the range is always going to be between 5 and 35%.
Is all of the private credit right now sourced through Apollo, and are you confident there is sufficient liquidity to meet the demands of the fund?
Not all of it is sourced through Apollo, and yes, we are confident that whatever exposure to private credit we have in the fund is going to come from sources where there is enough liquidity.
So this ETF, it caused a little bit of a controversy because the SEC had questions about this after the fund was launched. That's a little bit unusual. Can you explain what happened here?
So, Bob, it's not unusual for the SEC to have questions after a registration statement goes effective. We have seen that in other launches. What was a little unusual here was that the comments were public on EDGAR. So everybody looked at those comments and said, oh, there is something wrong with the funds. But if you look at also the answers to the comments, we were able to sort out those things within 24 hours. And actually, there is also correspondence on EDGAR that shows that the SEC staff did not have any additional comments.
Just quickly, are you going to remove Apollo from the title? They seem to be interested
indeed,
in that.
Indeed.
You will be
We have agreed to do that,
okay.
Yes.
Anna, thank you. Always a pleasure to see you. We're going to have a lot more coming up on the hot ETF investing trends on ETF Edge. That's 1 p.m. Eastern Time. Our guests, all-star cast here. Travis Spence, the J.P. Morgan Global Head of ETFs. Jay Jacobs, U.S. Head of Thematic and Active ETFs at BlackRock. Ben Johnson at Morningstar. Ben Slavin from BNY Mellon. All-star cast, etfedge.cnbc.com.